You're listening to The RealWealth Show with Kathy Fettke, the real estate investor's resource.
One of the big benefits of buy and hold real estate investing is the protection you get from insurance policies. But so many of us have no idea what's actually in our policy or if we did it right. And you don't want to find out that you're not covered if you've got to file a claim. I'm Kathy Fettke, and welcome to The RealWealth Show. Our guests today are Lee Rogers, the president of RealProtect, and Taylor Stowe, who's been the RealProtect representative for RealWealth members with questions. And they're here today to give us some insights on what to look for when getting your insurance. Well, Taylor and Lee, welcome to the RealWealth Show. It's great to have you here.
It's great to be here. Thanks.
Thanks for the invite.
So let's start with what you do and how you've been able to help investors protect their properties.
Yeah, sure. Absolutely. Thanks, Kathy. And of course, we're RealProtect. We're an insurance provider. So we work in providing insurance for investors. We work with investors really all over the country, really all over the world. We have clients in about 14 different countries around the globe, and we insure U.S. investment residential real estate. And that's all that we do, and that's what we're good at. We work with investors that are seasoned, and we work with investors that are brand new. And what we like to do is to take them through the process and help answer questions and make the insurance buying process for those investors as easy as possible. So we have Taylor Stowe on the call with us and on the pod here today with us as well. And Taylor works with a lot of RealWealth clients and answers those questions, quotes their insurance, looks at different scenarios, explains what different terms mean, because a lot of folks have insurance, but they may not understand the differences in investment insurance and their homeowner's policy or their business owner's policy. And so we like to really break it down and explain that and provide some good education as well as a great product.
I'm so glad, because it's, as investors, we're so busy just trying to close the property, let alone understand the insurance that we're signing up for. And we've had members who just didn't know which box to click and check to make sure that they're really covered in things like named storms, for example. If you're going to buy a property in Houston or an area that's known to have hurricanes, what's a named storm? What does that mean? And why should you have that as an investor?
Yeah, exactly. And so a named storm is just that too. And they've started not only naming the big windstorms that come along in certain times of the year, but they also now name certain winter storms. And so there are definitely some things that you need to look out for when you're considering insurance and what you're looking to buy. I've got a saying that, and I've used it in some other educational materials we've done with you guys, and that is your insurance can be really cheap on the front end or really cheap on the back end. And you definitely don't want it to be cheap on the back end. And a lot of folks, unfortunately, find out during a claim that may not be covered exactly how strong their insurance policy is. So a named windstorm, typically as it pertains to an insurance policy, is going to be one of those storms that comes along during wind season, and typically that season runs from June through about the end of November, and there are going to be storms that come up through the Gulf of Mexico or up the eastern seaboard, typically where there's going to be where that storm earns the right to a name, so to speak, as a tropical depression or tropical storm, and then eventually a hurricane. And so certain insurance companies will say, hey, we're going to cover you for wind, but not for named windstorms. And so we want to always make sure that the policies that are put in place, or if you're looking at insurance, that those named windstorms are also covered during that situation.
For sure. I mean, why wouldn't your agent advise you to do that? Because the named storms are going to be the big ones, the ones
Exactly.
that you're really going to want the coverage for. Why wouldn't that be pointed out to an investor?
Yeah, well, sometimes, unfortunately, there are unscrupulous people in all forms of business, but sometimes in the insurance business, there may be a situation where that agent wants to get the sale. It could be a situation where the agent just doesn't know. There's a lot of agents that work in certain areas, and if they're not local to that area or really understand that market, they may not even understand that named windstorms may not be covered. And so RealProtect is a specialist that works really in all 50 states and that works with real estate investors exclusively, we always make sure that we are providing coverage that's going to be the most comprehensive that's available. All the policies we sell, for the most part, are going to include named windstorm and aren't going to exclude those things. But there are certain things in any insurance policy that are covered and certain things that aren't covered. So it's really important that you as an investor have a policy, understand what's covered, understand what's not covered, and is it important to you to be covered? And if it is, what's it going to cost to insure?
Yeah, absolutely. I'm heartbroken that actually one of our own RealWealth employees had a horrible situation where their basement was flooded. The property manager didn't act quickly enough, and the tenant didn't really know, and it caused mold. It caused mold in the house, and then the person she hired, again, this was all kind of outside of our network, but the contractor she hired just tore the place apart to get the mold out. There were probably other ways to remediate it, but they just tore it out, and this is costing her like $60,000 or $70,000 when the property she paid for was like $60,000. So back in the day, and her insurance did not cover it for mold. Now, is that typical, or what should investors look for when it comes to mold?
Yeah, in mold is every policy is going to handle that differently. Sometimes the policy will have a specific mold exclusion. Most of the time, a policy will include some sublimit for mold. Some carriers will cover like $5,000 or $10,000. You can sometimes increase that coverage up to $15,000 or $25,000. The insurance industry, as it relates to mold, has really pulled back historically over the last 15 or 20 years. It used to be one of those things that was covered fully, and then the insurance industry began to have significant losses related to mold, and so now most carriers will offer some sort of sublimit for mold and mold remediation. The important thing is to pick up any coverage that acts as a coverage trigger, because a lot of times too, if you do have a coverage trigger, then you have what's called loss of rental income coverage that may kick in. So some other things that would help an investor in a mold situation. But anytime water is involved, it is definitely it can be a very expensive situation, and it's one of those things that's very important from a risk management perspective to get addressed quickly and correctly by hiring licensed remediation companies and folks that really know what they're doing.
Absolutely.
And it's also important too, if you do have a loss that's involving water, that you make sure your property management company documents what they're doing when they're cleaning it up, whether it's dehumidifiers or fans or anything like that, really documenting what you have done to prevent the mold from ever growing in the first place.
Mm. Well, you bring up a really great point. What kinds of things should landlords be doing to make sure that the insurance, first of all, that these problems don't happen, but that if they do, that insurance will cover it because you've tried to take care of it?
Yeah, I mean, what we try at RealProtect, what we try to be is we try not only to provide the insurance product, but we also try to provide risk management and sound advice, right? Because the best way to not have a bad claim experience is to not have a claim in the first place. Mm-hmm. So what we really want to do is to make sure, and we found that there's been a direct correlation with good property management practices and less severe claims or a fewer number of claims where we have good, solid property management in place. And so whether or not you are self-managing your properties or hiring a third party, you want to make sure that property management agreement is a strong one that can be written in your favor as the investor, but also that property manager is going to do things like screen tenants. They're going to perform regular maintenance of the property. They're going to do inspections. They're going to have checklists. They're going to do all the things that they can do to protect your property. And when they do those things, we find that we have fewer claims. We find that we have shorter vacancy periods, and we have a tremendous number of claims that occur during a vacancy period. 39% of our claims occur in vacant houses. So what are those procedures around vacant houses? How are they switching locks? How are they locking and securing the premises? Just all those things contribute to really better returns and not having to use insurance. And I would encourage folks too not to view their insurance policy necessarily as a maintenance policy, more as a catastrophic event type policy. And with good property management, a lot of times you can definitely have the best of both worlds.
And I also think too, just to add on what Lee's saying, is just being upfront with your insurance agent. This is what I'm doing. This is where I'm buying properties. This is, are you going to do any work to the property? Just kind of give us a good picture of what we're insuring. And that way we can pick out the risk and say, well, have you thought about this or have you done this? And that's just an easy way to get the conversation going. And, when we're quoting something, we're quoting it like you want it, because there are options. And it isn't, to insure the house, you do it this way. You do have options when you're buying insurance. So us presenting those options and letting you know what your options are is our job. And without knowing exactly what you're doing, sometimes people think that, I'm a real estate investor, so I just need a landlord policy. Well, there's some things in there, especially for the larger investors, or as your portfolio is growing, you have some options that you should be aware of when you're pricing out insurance or looking for coverage for insurance.
Yeah, I mean that's exactly it. People are rushed usually when buying an investment property, just trying to get it closed, and maybe don't know how to read the documents. One thing that's, like you said, it's important to understand is that not every problem with your property would be a claim, right? So if there's a leak under the sink and you have to replace something that costs a few $1,000s, that would not be a good example of putting in a claim. So what would be? When is it a good idea to turn that claim in and try to get it covered?
Sure. Yeah, well, when that little leak becomes a sudden accidental and a large leak, right, that causes a lot of damage, those are the types of things. And it really depends as well on your scale as an investor. If you're just getting started and you had a claim that was going to cost $5,000 or $10,000, that may rise to your personal level of where you need to file a claim, because it could be really devastating for you not to have that covered, or not to have that turned into the insurance company. So each situation is going to be a little different. What you do have to understand, though, as an investor, when you do have a situation, is the first thing you want to do is go and look at what your policy deductible is, right? So if you've got a $3,000 claim and you've got a $2,500 deductible, that's probably not going to be worth turning in. But if you've got a $2,500 deductible and it's going to cost $15,000 or $25,000, and that's definitely one of those things you probably want to turn into your insurance company. There's not going to be enough time, if you're only going to own one or two properties, for you to ever make that up by not turning that claim in. So there's definitely each situation is going to be just a little bit different, and it depends. What we're seeing right now, Kathy, is that the shortage of labor and the building materials and the increased cost in building materials is really leading to things that were used to not be major claims. They're turning into major claims. And so those are the types of situations that are leading to a lot more claims activity than we probably used to see, just because of those facts. And the other part of insurance, a lot of folks, when they think of insurance, they think of the fire or the water leak. But they also need to understand and really pay attention to what their liability coverage is. And liability is if somebody has bodily injury or property damage on that property, and you as the landlord get sued, that liability policy is what's going to step in and defend you. Even if you're not liable, and if you do get brought into an action, that liability coverage is really, really important, so that you have defense representation. And it may be something that goes through the system and gets thrown out. But those types of claims you don't want to ignore. You want to get those turned into your insurance company, and you wanted to get a good defense established day one. We're seeing a ton of liability claims come across our desk these days.
Really? What kinds of things?
We're getting a lot of slip and fall claims. We always get those. We get a lot of animal bite claims. So if you are a landlord and you allow animals, make sure you've got a good pet addendum. Again, that's not an insurance policy thing necessarily, but that's risk management, right? You want to shift that liability back to that property owner. You want to make sure that your tenant has good renter's insurance in those situations, because it's not your dog. But if you're allowing that dog to be on the property and it causes a bodily injury to someone, then you want to make sure that you've got good liability in place and a good risk management behind the scenes to support that. We see claims involving, we'll see some claims involving things like wind coverage, where you may own a property and you have a tree that falls onto somebody else's property that may be dead. Trees are a big thing that there's a lot of misconceptions around those claims. We see a lot of bodily injuries that occur on a premise, especially the rise of the short-term rentals. So if you're doing short-term rental, you want to make sure that your liability will cover you for a short-term rental. That's one of those things, like Taylor mentioned earlier, you want to disclose to your agent. A lot of short-term rentals have have the toys. They may have a swimming pool or a spa. So you want to make sure that your liability covers you in the event somebody's injured. God forbid somebody is injured and drowns in a swimming pool. Those are the types of things where you may not be liable, but you're going to get sued, and you got to make sure you've got liability coverage that will respond.
How much do you recommend?
Well, the typical policy that we sell is going to give you $1 million per occurrence. We always really encourage investors to consider what's called excess liability or an umbrella liability policy. The other thing too is that you want to make sure is that you have your coverage structured in the correct way. And what I mean by that is we have a lot of investors that will form LLCs or entities to own properties, yet they'll insure the property in their personal names, and they may not ever have that LLC or entity listed anywhere on their insurance. Well, in that situation, that insurance company is not obligated to cover you necessarily. It depends on their definition of who's an insured, especially if you're using a corporation or an LLC to own your properties. So you really want to make sure that you've got that really buttoned up and that ownership entity matches your insurance policy or is at least listed on your insurance policy. And then what we recommend, I mean, this is not a smart aleck answer, but as much as you really can afford, right? Because as litigious as we are in this society today, it's not overly expensive sometimes to purchase excess liability or an umbrella liability policy, using those terms interchangeably. A $2 million policy for per year for a basket of properties, maybe 10 properties, would probably cost around $800 to $1,000. So it's really not that expensive to pick up several extra $1 million of coverage for to protect yourself in a liability situation. Usually there's no deductible with liability insurance as well, so you're going to pick up coverage $1. So it's one of those things that's really not often talked about, because when folks think about insurance claims, they think about the house burning down and not necessarily all the other stuff that comes along with owning rental properties.
So what are the main differences between a landlord policy versus just a regular homeowner's insurance policy?
Sure. Yeah, a homeowner's policy, when you hear that term to an insurance person, that means that it's an owner-occupied home, right? And that means that you, as the property owner, that is your primary home or a secondary home that you're not using to lease out to other people. You're going to pick up things for like your personal property coverage, personal liability, loss of use as it relates to your main home, and that sort of thing. But there are some insurance companies that once you say, hey, once you've moved out of that home and you start renting that property to someone else, if you don't change your insurance from a homeowner's to a landlord policy, then that coverage can become null and void. So you want to make sure that if your use of a house and the way you've insured it has changed, that your insurance catches up to that as well.
Okay, and finally, what red flags should you look for when you're getting a quote?
Sure, you want to make sure there's several things, right, that you definitely want to look for. The first thing I would say is, and it's kind of the hot topic today, is what's that insured value going to be, right? And what type of flexibility does your insurance carrier or provider have in quoting that property? As I mentioned earlier, we've seen a large increase in insured values over the last several months, especially as it relates to the cost of replacing a home. And so is that coverage that you're being quoted enough coverage to rebuild the home? That's one thing. But number two is going to be the perils that you have covered. So most of the policies that we sell are what are called special perils policies. Special perils is the highest and best type of peril that you can buy. a lot of times you'll see a broad form or a basic form, basic being the least amount of things that are covered under the policy and very specific on what's covered. If it's not listed, it's not covered. So a lot of times agents will quote a basic policy that may be less expensive, but in the event that you have a claim, things may not be covered. One of the things that's not always covered in a basic policy is frozen pipes. And we see a lot of that depending on the part of the country. And so there's certain things that you want to make sure. The other thing is co-insurance. Co-insurance is we could do a whole podcast on co-insurance, and it would bore all of your listeners and watchers and viewers to tears. But if you have a policy with co-insurance, you can have some significant reduction in a claim payment. So know that. If you see 80 or 90 or 100% co-insurance, that would be something sometimes that you'd want to ask questions about. Most of the policies that we put in place are going to have co-insurance waived, which is very much in the favor of you as an investor.
Oh, very good to know. Okay, well, you guys did a full webinar that went into more details. You did that for RealWealth, and that's free for our members, and it's free to join. So people can go to realwealth.com and just look under the Learn tab to find that webinar. We really appreciate it because even after all these years in real estate, it can be overwhelming. It can be overwhelming to understand the policies, and they change. They change all the time, right?
Absolutely. I mean, one of the big things that was not necessarily as it relates to real estate investors, but a little bit was with the advent of COVID a few years ago, a lot of carriers were really tightened up their definitions of bacteria and viruses not being covered under a policy because there could have been some gray area at some of that point. Typically, it's always been excluded, but really tightened up that language. So as world events occur, the insurance industry is going to do what it has to do to protect itself, with the understanding that, I would say this about claims because we've talked a good bit about it. Insurance carriers are going to always try to underwrite to a profit. They're in business to do that, right? But I will tell you that the insurance companies that we work with, when you have a claim, an insurance policy is a contract. It's a contract between the policy owner and the insurance company. And we as RealProtect, we're a national broker, and we try to match insurance companies and insurance and property owners together. But the carriers that we work with, they want to pay those claims, and they want to pay them as quickly as possible. If there's coverage and they can find coverage in that policy, they want to get you as a property owner paid, and they want to get you happy, and they want to move on to the next claim because I promise they have another claim right behind yours. And so carriers these days are not trying to pick a fight typically, but if it's covered, they want to pay it. And if not, then there's going to typically be a contractual reason why that claim may or may not be covered.
So then you really should be checking in with your insurance provider every year, it sounds like, to make sure that you're really covered with the changes.
Absolutely. Yeah, absolutely. And again, we understand that premium is a very, very important aspect of buying decisions. Folks want to have inexpensive premiums, but they don't want to have inexpensive insurance. And unfortunately, most folks get an insurance education when they have a claim and it may or may not be covered. That's when they really learn about insurance and it becomes a real tangible thing, because otherwise it's just a piece of paper and an expense.
Yeah.
And so it becomes a very tangible thing when you have a claim, and especially a claim that may not be covered how you thought it was.
Good stuff. All right. Well, Taylor and Lee, thank you so much for being here. Taylor, did you have any last comments you wanted to make?
No, I appreciate you inviting us on here and letting us come on and talk insurance. And we're happy to talk with any of your investors, like you said, or any of your members. All my contact information is located on the website. So just pull up the RealProtect link and contact me, and we can dive deep into any of these topics if you have more questions. So thank you, Kathy, for inviting us on here.
Great.
And thank you for joining me here on the Real Wealth Show. Again, just go to realwealthshow.com and click on the Learn tab, and you'll get access to their webinar that's really thorough and will help you in filling out that insurance policy form. And also, you'll get access to hundreds of other webinars, all free, and it's free to join. So why wouldn't you? Again, that's realwealthshow.com.
The views and opinions expressed in this podcast are provided for informational purposes only and should not be construed as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, go to realwealthshow.com.